Hey, and welcome back to your weekly market outlook. This is for the 4th to the 8th of September 2023. Let's get this started with a quick recap of what's really going on last week. So we don't actually have a lot of important stuff at the early parts of the week. It does cause a little bit of volatility in the market because the market is looking for directions overall towards the end of August. But the 1st of September, I think there's something interesting during the non-farm payroll release. The NFP numbers was 187,000. That's above the consensus. However, what to note here is that there was a downward revision from the previous month again, and it was a pretty huge revision. It's 30,000. So we basically have 187,000 revised down to 157, and then the previous month NFP number was up 187,000. So it was technically flat, but it was above the consensus. No big surprises coming up from that side. However, the unemployment rate, that was a huge jump up from 3.5% to 3.8%. Now, the downward revision, when we're looking at it live during release last week, we didn't actually see that downward revision immediately. It came in a little bit later, about a minute or two later with a downward revision. But the high unemployment rate, that was a huge shock to the market. So we have the NFP number, technically it was good, right? But the initial shock that came to the market was that the unemployment rate jumped up from 3.5 to 3.8%. So we have a little bit of a mixed data coming out from the US. So we have that shock coming up from the high unemployment numbers that pushed down the US dollar, and then there was that downward revision from the NFP number. So the NFP number turns out to be positive. That kind of reversed the market a little bit. That it does propped up the US dollar significantly. We have the Euro USD, Pound USD basically retreating about a cent a drop. That was a very significant reversal that comes out after the NFP releases. And then we have the ISM manufacturing numbers again, was above consensus. So that does prop the US dollar for the end of last week. This week we have the US holiday, Labor Day, on Monday, September 4th. So Canadian market and the US market is actually going to be closed. We don't actually have anything significant coming out on Monday. On Tuesday, we expect the RBA to stay put at 4.1%. They're likely going to hold that interest rate at 4.1%. So we're not expecting an interest rate hike coming out from the RBA. I think that's going to be the case for tomorrow. We also have the quarterly GDP numbers coming out from Australia, expecting a little bit of a slight growth, maybe at 0.3%, previously at 0.2% the previous quarter. Bank of Canada, we're not expecting an interest rate hike as well. We're expecting the Bank of Canada to remain on hold, just like the RBA on Wednesday. And then we have the US weekly unemployment claims. This one here expected to go up a little bit from 228,000 to 235,000. And then we have the Canadian employment numbers on Friday. But apart from that, we don't actually have anything significant. If you're wondering where's the inflation number is not going to be this week. It's actually going to be next week, coming out from the US on the 13th. All right, let's take a look at the dollar index here. We can see that significant pullback on Friday there. It does boost it up a little bit. We're still below that key resistance on 104.50 for the dollar index. So until we surpass 104.50, this one here could still potentially be a potential double top if it fails again at 104.50. But for now, it looks like there should be enough momentum to break above 104.50, especially with the inflation numbers coming out next week. We probably expect that break to happen next week, not this week. We don't have a lot of data triggers for the US dollar this week, but yeah, next week it's a whole completely different level there. But yeah, for the dollar index here, we're expecting 104.50 to actually hold as a resistance. If it does break above 104.50 this week, then yes, we anticipate a stronger US dollar, and that's still in line with what we're looking at from the currency majors as well. All right, next up is the Aussie USD. There's a pink line there at 65 cents. That's going to be the resistance for the Aussie USD. This one here, range bound. very clear in terms of how it's ranging right now between 64 cents and 65 cents. If you are going to be trading the Aussie USD, trade within that range between 64 cents and 65 cents. If it does continue to fail at 65 cents, there's a higher chance that 64 cents wouldn't hold next week. It's probably going to get broken very soon. But yeah, if there's any progression above 65 cents, we still have 66 cents as a resistance, but we're not going to worry about 66 cents at this point in time. We're still going to be monitoring 65 cents, because if you take a look at the weekly pivot here for the Aussie USD, the pivot itself, it's at 64.50. In terms of resistance one, it's pretty much 10 pips above 65 cents, and in terms of support one, it's 10 pips below 64 cents. So we're still looking at that 64-65 cents range for the Aussie USD this week. The Euro USD, we basically have that rejection from 1.09, a very strong reversal there. Once price attempted to break 1.09, we moved way below 1.0850 as well. Now if we take a look at where it closes last week, it closes below 1.08. The momentum could continue to shift to the downside. Right now we're still looking at a projection towards 127.2. That's at 1.0713, pretty much at support one for the weekly pivot. We're looking at that move towards 1.07 this week, and I think we should have enough momentum for that to happen, because we already retested 1.0850, 1.09. This one here is likely to be on track for further continuation to the downside for the Euro USD. The Pound USD, we basically have that bounce off 1.2550, came back, retest 1.27, retest the Ichimoku cloud. There's a lot of resistance that's being retested here for the Pound USD. Here we got the 78.6%, which is at 1.2708. We got that key psychological level 1.27. We've got 1.2725 where the Ichimoku cloud is located. All of that has been tested as a resistance. Right now this is currently on track for the drop to the downside if it does break below 1.2550. Momentum wise, if you take a look at the stochastics here, it's actually flat. It's actually, if we take a look at the stochastics, it's literally flat. There's no direction coming out from the stochastics. So yeah, there's a lot that 1.2550 carries. If it does break below 1.2550, that's when we anticipate further drop for the Pound USD. How far can it go? We would potentially look for 1.2450, 1.24 and 1.2350, but eventually it's going to be closer towards 1.23 if it does break below 1.2550. But for as long as price hasn't break below 1.2550, we might actually see this one pull back up a little bit higher, potentially towards 1.2650 this week for another potential build up in momentum. That's where the pivot one is located. Ultimately though, the resistance one located at 1.27, that's still going to be in line with the 1.27 key level. So with the Pound USD, unlike the Euro USD where we anticipate further drop to the downside, the Pound USD is still more on a wait and see situation. We don't have a clear break below 1.2550. Until we have that clear break below 1.2550, we are going to be reserve in terms of calling out the Pound USD to have further drop to the downside. For now, this is actually still more of a range boundish condition. We still have a huge range, 1.27, 1.2550 as a support here. The reason why we're not calling out that bearish move on the Pound USD at this point in time, because the stochastics is just too flat, and we have that 1.2550 still holding on strong for the Pound USD right now. Okay, that's pretty much it for Pound USD. Next up is the Dollar Japanese Yen. Dollar Japanese Yen bounced a clear bounce off 145. So this one here is actually still on track for further gain to the upside. We're just waiting for that momentum to turn around. The momentum still points to the downside and price is not coming down. So there's a clear divergence being formed here on the Dollar Japanese Yen, where we actually see price action being held up above 145. The momentum is resetting itself. So this is more of a wait and see situation. I think it's very similar situation with the Pound USD, but with the Dollar Japanese Yen, we do anticipate that build up to the upside. I think right now what's propping the Dollar Japanese Yen is obviously the stronger dollar itself. But yeah, by looking at the price action, we notice that there's a buy on dip situation here. Every time it dips down to 145, it bounces back up, and price is not coming off. Stochastics is coming off, so the momentum is resetting itself. There's a lot of buyers in the market right now, just waiting for that breakout to happen on the dollar Japanese yen. In terms of what that breakout level is going to be, it's 147 to 147.25. Once we break those level, we're likely going to progress further towards 150, where the 161.8% is located for the dollar Japanese yen. So this one here, the dollar Japanese yen, wouldn't even think about going short the dollar Japanese yen at this point in time. You can see very clearly here, it's just lacking a little bit of volume, but people are actually buying on the dip on the dollar Japanese yen, and as long as 145 level holds, and it does seem to hold very strongly with that bounce off Thursday last week, very clean bounce off 145 there. We're likely going to get more buyers in the market, just waiting for that breakout to happen. Again, that breakout level is going to come in at 147 to 147.25. Once we break above those levels, we're likely going to traverse higher towards 150 for the dollar Japanese yen. So that's pretty much it for this week. We don't actually have a lot of key fundamentals. I think the market is probably just going to be waiting for the CPI numbers coming up from the US next week. Okay, so good luck to your trades. I'll see you soon.